Thank you very much for that great introduction. Great morning. Everyone have a great morning? Oh, well, this is kind of a little weak on this side of the room. What happened this morning? Could you not find the room here? I thought tariffs were complicated and our industry was complicated until I tried to find this room this morning. Let's get started, and I think I'm going to see, do you see my slides yet? Perfect. Great. Well, thank you very much. It's always a pleasure to be with Facilis and the partners of Facilis and the team there. What a great group of people, both from the partner perspective, but also the people leading your company. Chris and I have become very friendly. In fact, Chris was the International Person of the Year at ASI 2013. Chris, was that right? Sound right? So you've got a great team leading this organization and bringing you all together. And of course, you're in a great location. It's sprinkling outside. You can all hear the storm. But you know, this is one of the favorite cities that any of these kind of events are ever held at. So I'm sure you're having a great time. Let's get right into this. I'm going to be covering a lot of information that's coming from our annual ASI State of the Industry report that comes out in the end of July. So you're getting a sneak peek of this information. We'll be first talking about it publicly at ASI Chicago in a week or so at our trade show, but I'm giving you a sneak peek on some of the data. And we typically do this surveying over sort of a November, December, January timeframe because it represents the prior year. But because there's been so much flux in the space this year, we've been doing monthly and quarterly surveys as well. So I'm going to go through some of the slides that are both a combination of what happened last year, but also what's been happening since the turn of January 1st. We've been doing monthly sales numbers, and this part of the reason that we gather this information, by the way, and the way that I would suggest that distributors use it is as you see the information I'm presenting, whether it's about profit margins or sales movement, think about where are you? Where are you? And where are you? How do you benchmark yourself versus what other distributors, or for those of you in the room that are suppliers, how do you benchmark yourself? So let's look in May, roughly half the companies reported a sales decline in May, 46% of distributors. The remainder were either up or flat. That's about what it was the month before, and that's about how it's been trending. So if this sort of continues, I would expect, and I'll get into the confidence people have in a second for the second half, but I think we're probably looking at a couple of percentage point increase in sales for distributors in the full year. So think about how do you fit in, which of these buckets are you in? Are you increasing, are you staying the same, or what's really been going on with you? And of course, it's been a difficult first part of the year. I don't have to tell you that all of us want to have certainty in our business. When you wake up every morning, you want to sort of know what's the course ahead look like. And certainly in the 08-09 financial crisis, COVID, we've had times when we didn't know what was going to happen and we were very concerned. But it seems as if the first part of the year, mostly driven by tariffs, but also just general economic uncertainty, has made it kind of difficult. We have something called the Counselor Confidence Index, and we judge based on responses, how confident are people in this industry? And the confidence index right now is sitting at 79. And to put that into some historical perspective, just before COVID, we were at 114. It dropped to 54 during the pandemic. In January of this year, it was at 100. So we are trending better than we were last month. It was 77. We're trending up a little bit. We're still below where we were in January, and certainly historically, we've hovered between 90 and 100 in a general decent economic environment. Right now, I think the main driver is people being concerned about what's the sales outlook for the rest of the year. My sales so far this year have been X, and how confident am I going forward? I would say that as we ask people, how confident are you in the rest of the year, the confidence really pops up. And I think that's driven partly by the general economy, but also we tend to be an optimistic group as an industry. One of the things about this industry that I love is that so many people are in sales. Many people, no matter what role they have in an organization, the owner, the CEO, whatever title they might have, they're probably more on the sales side than they are in the back office and sort of the financial side. And so certainly our industry tends to be much more confident. We always see this happen in every survey we do. People feel much more confident about the future than they do where they're living right now and what they're sitting in. But I think that certainly from an economic perspective, we're seeing some things that are getting better, and certainly from a tariffs perspective, that's improving. In January, 92% of the people told us they were concerned about tariffs. We're at 87%, so it's dropped about 5 percentage points. I would expect that to continue falling. I think we've gotten sort of over it, frankly. We're sort of saying to ourselves, we don't really know what's happening. We're going to have to manage through that. But I think most people have decided that we just have to sort of move on and not be worried about this every single day, because otherwise it will sort of consume us. What's going on in the general economy? Because of course, whatever happens in the general economy really impacts us in so many ways. This gives you an overview of a few different points. It's a little busy, but basically it shows you GDP growth, and that's in the bar part. The two lines, one shows unemployment rate and one shows inflation. And as you can see there, the economy is actually in pretty good shape. So despite the fact that people might be concerned about or have been concerned for the first half of the year about the economy, the facts are pretty clear. The unemployment rate has been very steady. That orange line is incredibly steady. And at that rate, hovering around 4%, that's really full employment in the United States. You won't get unemployment lower than that. If that starts popping up, it may be a concern. But the reality is you always have 4 or 5% of the people looking for a job. And so that level of unemployment is pretty sustainable and is in quite a good spot. Interest rates are not shown on this chart, but of course there's a lot of viewpoint that there's going to be a couple of cuts of the interest rate that the Fed tax in the rest of this year. I think that likelihood is frankly less than most. So you're going to read about two interest rate cuts between now and the end of the year. I think that's not likely. I think you're going to see one. I think you could actually even see the interest rates pop up a little bit, which would not be good for us or for the economy. But certainly it's built in that there's going to be a couple of interest rates, which would probably be about 0.5 percentage point. Of course, that helps everybody if you're buying a car, buying a house, keeps the energy and the economy growing. CPI, inflation, inflation is tailing off. We're just above 2%, between 2 and 2.5%. That's a really good space. The Fed's goal, of course, is 2% inflation. And so inflation, unemployment, both pretty good. And you'll see that the general economy, the real GDP growth, is pretty bullish outlook for the second quarter. We don't know what it was in the second quarter yet. The facts aren't out. But the estimates are around 3.6 to 4%. And that's really a nice, healthy growth. And in the first quarter, it's showing it was down. But here's the secret that you might not have seen from the headlines. GDP is how much did you make in the United States less what you imported, right? Less what you imported. They subtract that. It was negative in the first quarter. Anybody want to say why? People were building up huge inventory and importing at very high rates, higher than normal rates of import, worried about tariffs and wanting to get ahead of tariffs, getting products in the United States and onshore before tariffs took effect. So this huge increase in importing offset the performance of manufacturing in the United States to lead to a drop in the first quarter. But it was a quite artificial drop. If you sort of add that all back in and say, what if we had natural levels of importing, you would have been around 0.8% growth or something. So it was not as dire as the headlines, generally speaking, made it appear. Okay, so let's talk about margins. How much, the sales are one thing, but what are people making? Well, and you can see the history back here at 2019. In 2024, based on our research, margins for distributors were at a high, 37.8%, even beating 2019, which was a great year. As we look back at the economy in 2019, obviously it was a great year. And this is really, by the way, the beginning of drilling down on some data from the State of the Industry report. That is a really healthy spot. Again, each of you can sort of think about where am I and how do I benchmark myself on that. As we think about the rest of the year in 25, we are hearing from people that they're having a much tougher time on margins than they did in 2024. So my guess would be that margins in 25 are going to be down 0.5 to a full point as we go into this year or as we complete the year. And that's really driven by the fact that lots of costs are up. Wage inflation that's carried over from last year to this year, increased costs for really everything we buy personally for our business. In the B2B space, whether your rent has stabilized or maybe it's gone up a little bit, are utilities up, just your general cost. And then you get into sort of the promotional products pricing. and how much of that are you absorbing, how much are you passing along to your customers, and also, by the way, how much are the suppliers absorbing. The suppliers in this whole process, by the way, have done an incredible job, and they always do. As Chris said earlier today, I am always impressed at the cash capital investment that suppliers make into their manufacturing facilities, into the partnerships they have offshore mostly for manufacturing, the incredible amounts of inventory they're carrying. I mean, there are industry suppliers that have hundreds of millions of dollars of inventory that support each of the distributors in this room and distributors around the entire industry. And then of course, the employment that they have for decorating. And by the way, the very shallow insight they have into what the orders are going to be tomorrow. You know, this industry is not a long lead time industry, and so suppliers really do a lot of investing in this. I think we're going to see distributor margins drop a little bit as we report out 2025. But again, very healthy margins, 27.8% last year, up 1.5 points from the prior year, and in a really pretty good spot. So we asked distributors in June, what's on your mind? You know, what are the things you're mostly troubled with? What are the biggest challenges you have? And for the second year in a row, the challenges for distributors were the same. One, how do I get more customers? I'm having a harder and harder time getting more customers. And I think there are a couple of reasons for that. One is that people don't really answer their phone anymore. Getting people on the telephone as a new customer, getting in to see somebody is tougher and tougher. I also think our industry is not done as well as it needs to do on using other channels. Email, of course, is not nearly as effective as it used to be, but also social media and some of these other channels of attacking new customers and new prospective customers. So that worry about how do I get more customers, and then remaining profitable under pressure to cut prices because you're trying to match somebody, etc. I think the piece there that we miss is that, and this room is a pretty unusual room because you are so successful in your business. But in overall in our industry, you know, our distributors are frankly sometimes more product sellers than they are solution providers. And we have to, I think, always remember that it's about listening to the customer. What are their problems? What are their business problems? Who are they trying to reach? Who are their prospects? What are the demographics of those prospects? And then coming back with a solution that's a marketing solution that's very business-oriented, that of course includes promotional products, but really is wrapped in a marketing solution to help that business reach out to their customers, to their prospective customers, and to their employees. So I think that profitability piece is because sometimes we get so focused on product, we forget the fact that we can generate more profitability and generate more revenue by things that are not about product. In fact, our surveys show that if you were looking at this 15, 20 years ago, the revenue for a distributor would have been about 80%, maybe 85% from the sale of products. We're around 58 to 60% now because so many distributors have added so many different products and services to what they offer. They're building websites for their clients, they're designing graphics for their clients, they're getting into fulfillment with their clients, they're doing lots of things that they had not done before. They can generate really nice, profitable revenue. Wearables and non-wearables, a huge part of our business. I think 1970s, if the history is there, so let's talk at 50 years ago, the t-shirt was the first wearable in our industry. It is now 45% of our industry in 2024. If you were looking back 21, it was probably around 43%, so a couple percentage points up. I think we're sort of at a stasis point. I think we'll probably be around 45, 48% for the next 5 years between wearables and non-wearables, but it really makes up an incredible part of our business. And of course, this also talks about, in some ways, the convergence between print and decoration and this industry. I was speaking to a gentleman a while ago, and he is, I think he told me, 30% hard goods, and the rest of his business is wearables. He came out of the decorating space. That is more and more a common thing that we're seeing and hearing about people. And of course, this adds up to roughly $27 billion in 2024 sales. And that's a very big number, $27 billion, and 1.5 of it, I think, is through Facilis. That is a very, very big number. Let's not get too excited, though, about that number, because I'm going to throw a little cold water on that. If you looked at the 2019 number, and you adjusted it for inflation, we as an industry would need to be around $33 billion to be equal. So 27 is where we are, 33 is where we would be if you added inflation to that number. So we need to remember that we have not kept pace with inflation as an industry overall. Okay. Top products. What are people buying? Year over year is always difficult to sort of see much movement. I would say, in fact, not a lot of material movement here. If you look at these trends from one year to the next, T-shirts, number one, bags have been very benefited, by lots of different changes in the dynamic of eco-friendly, et cetera. Drinkware, of course, the Stanley craze sort of faded. And going into 25 and in maybe a little later, the drinkware, and there's a few products on here, they're going to be pretty hard hit by tariffs. And so that's a very big issue. Especially, tariffs have gone from just about where was the product sourced, but also what's in the product. So stainless steel and other kinds of material is being taxed at even higher levels. So I think that there's some market share gains here and there. Also recognition rewards, which I think is not listed separately here, but we're hearing some difficulty in the recognition and reward space just generally. We haven't done a lot of deep dive on that yet. But if you're in the recognition and rewards space and you have a lot of programs in that space, find me sometime over the course of the next couple of days. I'd like to really hear how that's going. We're hearing some companies pulling back on some of that recognition and reward space. Top markets for, several years. This top 5 list has not changed dramatically. Education, number one at 13% of industry sales last year. But boy, there's some problems brewing there. With all the changes to the financial underpinning of some of the educational institutions, there's a little concern that educational institutions will be able to spend a little less money than they had in the past. I don't think it's going to drop from 13 to 10 or 5, but I think that educational institutions, and if they're ones that you're serving, they're having a really difficult time in doing a lot of inward reflection on, where is the money coming from and how am I going to be able to spend that money going forward. Healthcare also, lots of change in the healthcare space from a federal, state level. There's a lot of discussion about some local and smaller rural hospital systems maybe closing over time. Of course, until we see it, we don't know what's really going to happen. But I've certainly got some concern in those two very important segments of the market in promo. And construction actually could see some lift, although, of course, with stainless steel and some of the different tariff levels, there's some concern about what will happen there. But I think if interest rates fall, we'll see some pickup in construction. So lots going on here. And of course, manufacturing, to the extent that U.S. manufacturing gets bigger or we're leveraging more U.S. manufacturing, we'll be in a great place to take advantage of that. Canada. Top markets there, very similar, just sort of in a different order. Construction, manufacturing, education, clubs and civic organizations, that's a very big market in Canada. And then, of course, healthcare also. Very similar. And, of course, on the product side, the same. T-shirts, caps, headwear. A little colder in Canada, so caps are a little higher on the list. Drinkware, bags, and polos, not polio. Average profit margin for Canadian distributors dropped a little from 38% in 23 to 36 in 24. But very comparable to the U.S. is almost 28. Top 40 distributors. They are big and getting bigger. Every year we do, we unveil the top 40 distributor firms and top 40 supplier firms. We announce that in ASI Chicago, which will be next week in Chicago. And we always look at how much of the sales are in those top companies. And so 38% of the sales in our industry were among the top 40, the 40 largest distributors in North America in 2024. And that was 37.8% in 2023. Lots going on in that space. There are in the 24 list 3 new distributors on the list. 2 are really interesting additions. Print is their core. So printing on paper, printing on promo items is their core business, but they have really become very big in promo as an add-on to what they are selling. So that, I think, really speaks to the growing convergence that's underway between these print and promo spaces that we all are in. or many of us are in. And of course, on the supply side, lots been going on there. Alpha Broder was a name that had been a perennial in this list for a very long time. You won't see it this year. Obviously, they reported $2 billion of sales in 23, but they were acquired by S&S, the biggest promo deal in history. So they're now merged in with S&S. I know we're going to be hearing from Frank, I think, tomorrow. And on the distributor side, Counselor Top 40 perennial AIA, which had $155 million in 2023 sales, is off the list in 24, acquired by I Promote You, which was one of the largest distributor M&A deals ever. So we're seeing a lot of mergers and acquisitions going on. They've always been in this space. You know, I've been at ASI for 23 years. From the first day I walked in, people were talking about acquisitions and mergers and how it's going to really affect the industry. Here we are over 2 decades later. It continues to affect our industry, but here's the greatest thing. A lot of people continue to come in the industry space, both on the supplier side and on the distributor side. When I joined 22 years ago, and I just happen to remember this, we had 3,200 suppliers in the industry that were part of ASI. We're now at 3,000. So over the course of that time, only about 200 on a net basis have gone down. But here's the secret to this. Okay? You might want to guess. I want to hear some guesses. How many suppliers join ASI every year? New suppliers. Come on. Louder. I heard 50, 200, 300, about 400. So we're at 3,000 and have been for 2 decades. 400 come in. Now, I'm no mathematician, but how many leave in a year? 400, right? Reflect. So there is an incredibly attractive business of promotional products. Now, of the 400 that come in, you know, many of them will leave pretty quickly because they discover that having one product that can be imprinted is a very tough world to be in. So they'll probably find a supplier partner that will add their product to their lineup and expand what that supplier does, and they'll license the product or whatever they'll do. But there's a lot of attractiveness to this industry. So, you know, through all these mergers and acquisitions and all the discussion about that, certainly there is a very much higher percentage of sales among the top 40 distributors, up to 38% in 2024. We're just below 50% of sales among the top 40 suppliers in 2024. Those are big numbers, but they have not moved substantially, and by substantial I mean more than about a point. They'll go up a point, down a point, up a point, down a point. They're fairly where they've been since COVID, and so we're not seeing any significant movement. It could be that we'll see significant movement going forward, but not this second. Average order size. I think this is an important stat for you all to think about based on how big you are, and you'll see that on the left-hand side. We sort of call it extra small, and extra large is the top. Average order size, about 1,871 for a large distributor, which is the 1 to 5 million range, and about 1.8, a little less, but you know, roughly the same in terms of materiality if you're over $5 million. So that's, you know, as distributors grow, obviously their order size tends to get bigger on an average basis. But I'm also hearing across the industry a lot of people saying that the order size has been falling this year. So we don't have any stats yet, but certainly from what I've been hearing from many distributors, orders are up, average order size is down, and their profitability is sort of, I mean, their revenue is sort of flat. So we'll have to watch this very carefully as we go into 26. You know, it costs a supplier and a distributor roughly the same to process an order. And so while there's a lot of automation and there's some really exciting things coming to your platform in terms of the purchase orders, certainly processing an order is expensive. I mean, I've had suppliers tell me that it costs about $30 to process an order because of all the back and forth, emails and phone calls and all the internal platform activity. $30. Well, on an average order size of $900 and for really small distributors, that's a pretty big percentage of the profitability for a supplier. And so anything we can do together on efficiency is really important in this space. Company stores. You know, this is especially interesting. You know, we just did some research in South Africa for the largest supplier in South Africa, and that research showed that only about 5% of South African distributors were doing anything with company stores. We then told them what's going on in the United States, and now they are incredibly hungry for information about company stores because about 46% of distributors tell us they are using company stores in their business with their clients. And I know there's a number of providers of company stores, including your own. But there's a lot of action going on in company stores. And in fact, ASI just launched a new solution in that space as well. It's a really important space. I think that over time, almost every client will have an active company store. Almost every client you have will have an active company store. And that's because they either have products that they want to repeat order a lot and they want to have a very simple place to do that, or they want to offer it to their internal employees for recognition and rewards. They want to offer it to customers. It's a gift with purchase kind of program, whatever it is. I think that company stores, and if you're not using them yet, we certainly have information at asicentral.com on how to use company stores. I'm sure that Chris and the team here could provide information, but they're really an important part of what the industry is doing in terms of its growth and how it's operating. Sourcing trends. This one I'm frankly not a huge fan of, but we asked the question from distributors, do you source products from outside the United States or Canada, even occasionally? In 24, that number was 62% of distributors said they did. Now, the reason I'm not a huge fan of this is because I think that we as distributors and suppliers have to work together to support each other. And I think it's incredibly important. And I think that, generally speaking, distributors are great at selling and serving their clients. I've heard a lot of horror stories about distributors that have tried to do a lot of their importing themselves and sourcing themselves. It's a very difficult work. The work that the suppliers do to make sure that products are safe, that they're delivered on time, that they're properly accounted for, that you can really trace the source back to where it was to ensure that the inputs like cotton are from sources that you would be proud of with your clients is really important work they do. But this has been a very big trend among distributors. And not long ago, that would have been a very low number. And the thing that's been striking to me is in some of the Facebook groups and others, it is a very widespread, open kind of conversation. I think that communication has improved to factories that are outside of North America. And that's been, I think, one of the reasons people are looking to, how can I control costs in a better way? I would urge distributors to really talk to your suppliers. If you have a very big order, suppliers are often very good about working with you on that order. Or if you're trying to do some custom work, a lot of suppliers now have custom departments that can really help with that so that you stay focused on serving your clients, meeting their needs, exceeding their needs, looking for those new customers, while other people handle the very difficult work of sourcing product, decorating product, and warehousing that product. That all said, where's it all happening? On the supplier side, suppliers, of course, have been diversifying where they're buying product, and they have tried to shift, really since the first Trump administration, when there were the first tariffs on China, which continued through the Biden administration, and now we're in the second Trump administration. Many suppliers have moved their sourcing from China to other parts of the world: Vietnam, Cambodia, South America, Mexico. There's a lot of movement that's happened. I think suppliers have done a great job with that. But now, of course, they thought they moved into safe countries where there would not be risk of tariff. And now all the suppliers are sort of scratching their heads saying, now where do I go? What do I do now? Because there's tariffs in so many other places. But so that's what we're seeing among importing. Made in USA. Made in USA. While promo industry sales fell around 3.6% in the first quarter, according to our research. That's the worst quarterly drop in 4 years, by the way, in the first quarter. Made in USA promo companies saw really nice growth. Tariffs, I think, have, of course, fueled some of this demand, and is a really important trend. 80% of distributors told us in their surveys they plan to buy more U.S.-made goods. Only 23% said they would buy significantly more, but 80% said they would buy more USA-made goods this year than they did last year. That's a very big number. We very rarely see that kind of a swing, so that's a very big number. Turnaround, rush orders. We have been hearing about this for a decade, the sort of Amazonization of expectation among people. But it's been a little moderating. After 2019, it was 37% of orders were required in 5 days or less, and that dropped during COVID and has now started to recover. We're back at 28%, and certainly suppliers are reporting more urgency this year among clients, partly because people were trying to get the product really fast so they could avoid the potential for price increases, etc. But for others, I think it's just post-COVID coming back to normal, people wanting things to move. My advice to suppliers has been, if you can't get an order and get it out in 2 days, you need to figure out a way to do it. I think that this is going to continue to be a very big deal. Your buyers are going to want product as quickly as possible, and I think they will in 5 or 10 years not put up with something that isn't within a couple of 3 days of ordering. We may not like that, by the way, but I think that it is reality. So while post-COVID orders are back to that level, okay, how are we doing in terms of errors? Nearly 90% of orders arrived without any issues. They arrived on time in 2024, but about 84% arrived without errors. That's a big error rate. 16 points is a very big error rate. That is an area where we've been sort of in the high 80s of error rate, or without error rates, for a long time. That needs to get to be 98%, 99%. So there's a lot of work that we need to do, and the automation that was discussed earlier today is going to help with that. All sorts of AI, better manufacturing, better monitoring of manufacturing, robotics. I'll get into some of those in a moment. But our on-time rate has been pretty good, 90%. It ought to be higher. It ought to be 98%, 99%. We certainly know that customers cut it close sometimes, and we cut it close sometimes, and those orders need to be on time. But the error rate is something we've all got to focus on. Whether you're a supplier or a distributor, we've got to focus on getting the error rate down. Retention rates. Do you keep a customer? Do you keep a customer? It's been very flat since COVID, around 78, 79%. As we look at other kinds of B2B businesses, this is actually a really great performance. In the B2B space, your retention rate can be between 60 and 85%. We're in a really nice sweet spot here, around 80%. Really nice retention. And that's up, a point, or I guess it's up 4 points from 23. I think that we'll have to continue to be proactive with that, because as people look around for better pricing, et cetera, there's risk, of course, that customers will look elsewhere. But I think our retention rate is really in a nice spot. Well, we asked distributors, are you concerned about your clients developing more negative attitudes toward promotional products? And of course, that can be for all sorts of reasons. That can be because a product is poorly selected, it is poorly manufactured, it is a product people don't want to keep. The role of distributors really is to help a buyer decide, for the demographic and the person you're trying to reach, what products will they keep and will they love? And what will they maintain and keep? We've all got drawers full of products that are promotional products that have logos because we like the product. Either it was individualized with our name, it is a product that we use every day, it's in our car, it's in our home, it's wherever it is. Distributors are still pretty concerned about this. They are very concerned about whether sustainability concerns will be addressed. Suppliers need to provide information to distributors about the sustainability of their product. We need to make sure there's not greenwashing going on. And those kind of attitudes are not good for us, obviously. We want to make sure that the buyers love our product and that they will keep our product. In terms of industry awareness arising, 31% of the distributors told us that client concerns about promo reputation. That's up from 23%, and was highest among the largest firms. So the bigger your clients, the bigger the firm you are, the more likely it is that your Fortune 2000 or Fortune 1000 client will be concerned about this. But this is something we track a lot. We try to do a lot of advocacy explaining the power of promotional products, the return on investment that marketers get, because promotional products are really the best dollar that a marketer can spend. And in fact, if you've got a client asking you about that, at asicentral.com/research, asicentral.com/research, we have lots of return on investment information about every promotional product category that you can use with your client. So it literally says what the return on investment is for a bag or for a t-shirt or whatever it is. It's very helpful with clients. Eco-friendly. We ask, in 2024, did clients ask for more environmentally friendly products? 27% of distributors told us, yeah, my clients ask more than ever before. And again, the extra large distributors, the largest distributors, it is more likely. But sustainability, it was a trend for a while. This is baked in. This is who we are. We have to make sure that our products are sustainable. From a client perspective, they want the product to be sustainable. They want to understand environmentally where this product come and where's it going to go if it's not kept at some point. And this is a really important part of what all of us need to continue to do. I've been telling suppliers that if they have products that are not sustainably, that they can't maintain the sustainability and feel good about it, and it's true, and environmentally friendly, that they're going to be out of business in 5 or 10 years. If you've got a product that you're selling or that someone is manufacturing that really is not sustainable, that is not a sustainable business model. That is not going to work. The next generations are asking for sustainable products, environmentally friendly products that have been recycled and are made of recycled material or that can be easily recycled. If those answers are not checked off in 5 or 10 years, the product will not be sold. It will just not be sold. A couple more points. The future. So I went on ChatGPT. No, I used Microsoft Copilot. And I said to Microsoft Copilot, find a picture of Tim Andrews and make him a cartoon of a robot. Well, here's what it did. Not sure how it was. Next year you might have Roomba Tim, speaking. I don't know. Robotics are really making huge, big changes in our industry. Amazing changes. I'm guessing that Frank maybe will be asked tomorrow about robotics. If not, it'd be a good question for him. They're spending hundreds of thousands of dollars, just as Sam and all the other big companies are, to really create efficiencies using robotics in their warehouses. And it's really a major shift in terms of what the investments look like across these. It can cost upwards of $100,000 or $200,000 to actually outfit an existing warehouse with robotics. But that robotic information and that robotic activity creates incredible efficiencies for everybody. In 2025, the United States will spend about $10 billion in robotics in warehouses. $10 billion. Okay. AI. I want to see a show of hands. Who's using AI daily? That's pretty good. Who's using it at least every 2 or 3 days? Pretty good. Pretty good. Pretty good hands. Well, it is an amazing change in the way we operate and the way we will operate. It is changing productivity everywhere. There are many companies that are now talking about 20 and 30% improvement in the development of software code. We're using it at ASI. I'm sure you're using it here. It is really a game changer in almost every single aspect of our lives and our business. There's some concerns about it. Data concerns, is my data safe? You got to be very careful as you're looking at using ChatGPT or any of the different services. There's dozens of them now. One of the things I would caution you is to really look at, there's that license agreement we always just all click through, right? And we don't even read it. Well, a lot of those license agreements say, we can take your information and do basically whatever we want with it. That isn't good. So be careful as you're using these things. Especially be careful if you're uploading some sort of information that is really proprietary to you. If you're uploading a spreadsheet and asking AI to come up with, give me my list of my top 50 clients, well, you might want to think about that because it may not be safe. That information could be used in some sort of other way. So those security concerns are real and it should be really important. But they're really changing the world. I know that Syncor is going to have some AI. I heard lots of different services across the industry are using them. And as it expands, expect more speed, more activity, and more efficiency for you to be able to spend time on things like serving your clients instead of doing all sorts of things that can be automated with AI or move along more quickly with AI. We're doing basically all these things in ASI today. We're doing things we've never thought of. I'll just give you a couple of examples in case they can be useful to you. When we write a marketing email, we put a marketing email and we say, we used to write 2 or 3 subject lines. We would sort of discuss those subject lines, maybe among the marketing team, and then we might even test them. We would send out one subject line to 200 people, another subject line to 200 more people, see which one got the most open rates, the most click-through rates, and then use one of those 2 subject lines to send to everybody else on the list. And I know many of you have gotten ASI emails, so you know that we send a lot of email. We now can do that with AI and say, generate 1,000 subject lines. We can then send each of those 1,000 to 10 people or 20 people. Then we say, now pick which ones are winning. And it goes from having 1,000 subject lines down to 1 or 2 subject lines down to 1 that really wins. And you can do that in a breath. We could never have done that before. Never have done that before. Okay, questions? We're going to open it up. I think someone over here may have a couple of questions for me. And anything is fair game. There's my contact info, too. Are you going to be my moderator?
That's right.
Great.
All right, well, thank you for being here. I thought that was very insightful information. Appreciate you spending some time and sharing that with us. A couple of questions I have for you today are, what are you most excited about regarding the industry?
Wow. You know, I think that this industry is the most resilient industry I have ever witnessed and ever read about. If you think about what happened in 08, 09, what happened in COVID, there have been so many times when you would look at our industry and go, gosh, what do I do? How do I get out of this? And every single time we have recovered so quickly from that activity. So I think that resilience, I think the creativity of the industry. You know, some people maybe are afraid of AI, which I just mentioned a minute ago. I think AI really blows up and makes creativity multiplied. You know, so people that are using those tools can be even more creative and spend their time on solving those business problems that a client or a prospective client has, not so much the back office. I mean, I think we're too sucked into the back office in this industry. We spend way too much time on all the back office stuff and not enough time on the client stuff. So I'm hopeful that AI and automation and additional technology tools that we're all working on and using will help us have even more time to spend with clients and prospects. I'm also really excited about the fact that I see more and more younger people in the industry. You know, when I walk the trade show floors or I look down at the trade show floor, I see more variety of people, both age, you know, nationality, whatever. I mean, you know, I think that is really important, and I think that it makes it exciting. It's an exciting industry.
Yeah, well said. Conversely, what are you apprehensive about?
Apprehensive. Well, I'm always apprehensive about uncertainty, and so this has been a very uncertain time. But uncertainty allows you to have a competitive advantage if you figure out how to continue to manage your business. And so, you know, I would say I'm concerned about that. I'm concerned if we're complacent on some of the things we talked about. If we get complacent on sustainability or environmental, or if someone's in the audience saying, well, my clients aren't asking about that, it's not really important. Or a supplier says, well, you know, this is what I make and I'm going to continue to make that. I'm not going to look for alternative ways to make my product. Complacency would make me very, very concerned.
You had showed a lot of facts earlier in your presentation, and you also mentioned that you've been in the industry 23 years. How do you feel about the state of the industry right now, and maybe let's say the next 6 months?
Well, next 6 months is a short period. I would say I feel stronger and more excited about the industry than I have probably in about 10 years. I think coming through COVID and seeing what we were able to do through that period, I mean, it's kind of hard to remember, but I mean, we had suppliers that had never sold. If we had talked about a product for saving people's lives, we had no idea what it was. And we started manufacturing it in a month, and we started selling it in a month. That's pretty impressive. We save lives, and I think also the trust that our clients have with us has never been higher. You know, that time of period, people were calling distributors and saying, hey, I really need to have X product, you know, and how do you find that for me, and can you find that? They called us. They didn't call somebody else, they called us. And when they wanted to reach out to their employees at home or their prospective customers or their customers, their precious lists of people, they called us and said, hey, I want to give you my top 1,000 customers or my 3,000 employees. I'm entrusting you with this data because I want to send material to them, or I want to send promotional items to them, or I want to send something creative that you're going to help me put together. That trust level, I think we've never really used or really never appreciated that we had. I think we sometimes spend too much time looking down at our toes and saying, somebody sees you in the hallway, what do you do for work? Oh, I sell promotional products. We should be proud. I mean, we solve business problems for people, and we have the best marketing solutions for them that are the most cost-effective in the world and more recallable. Coming here today, you passed lots of signs, billboards. You may have gone on a website and saw a bunch of digital ads. You walked up and down the halls, you saw, other than the Starbucks logo that you saw, okay, it is very unlikely that any of you remember any of the different ads you saw, whether it was on a digital form or whether it was physical form at a billboard around here, right? But think about how long a product lives with somebody and how much they remember that logo and how much they recall that product. I remember the first question or two that I got at ASI on a stage like this, and somebody raised their hands like, what's the first product you remember promotional product? And my answer, it was very clear. It was in a local electric company. It was a fly swatter, a yellow fly swatter, okay, that my mom had. And she would chase me around the house with this thing. So it wasn't necessarily a good memory, but I remember the name of that electric company, right?
One last question for me, and then we'll turn it over to the audience. If you have any questions, just raise your hand, and Jim will come around and give you a microphone. You and the Cohen family are well-known, well thought of, and established pillars in the North American promotional products industry. Do you expect the role of ASI plays in the industry to change in the next 3 to 5 years?
Tough question, hard question. I would say there's a couple of things going on at ASI. One is the Cohen family is going through its own transition. We've got lots of family businesses. How many businesses here are family businesses? Family businesses. A lot of hands. The Cohen family, it's a family business. They're in the second generation. Norman Cohen, who hired me when he was about 70, is now 90. He'll be 93, his birthday. An amazing guy. If you've not met Norman, you need to meet Norman at some point in your life. And he's transitioning that business. And certainly from a senior perspective, we'll be in a transition at some point. You know, no one works forever and lives forever. And so I think that ASI will become more important. I think we'll become more global. You know, so many distributors and suppliers are doing more global business. We're sort of looking at it and going, how do we become relevant or more relevant on a global basis? We don't really have an answer there, I don't think yet. But there's a lot of interest in Europe, especially among distributors, to understand better about this space. And of course, a lot of U.S. and North American distributors want to do more business in Europe because they may have a client that has employees, or they may have customers in Europe. So I think we'll be more international. I think we'll be more transparent. I think we're really focusing on a lot of research and information we can provide to people. I want to become much more focused on the future and what we can tell you about what's going to happen, not what happened, you know, and so we're trying to do a lot more with that. And I think there's a lot our industry can do together. I also hope we help foment this efficiency that so many people are working on. You know, so many distributors and suppliers are working together on how do they make their businesses more efficient, more effective, more connected than ever before. I think we'll be there in ways that we haven't been.
Okay, any questions from y'all out there? There's one over here.
Any questions? There you go.
Jimmy, right
Run it
over
over,
here.
Bob.
Yep.
You feel comfortable with what you're seeing in the fine print for Microsoft Teams, Copilot, and whatnot?
Yeah, I would say I feel pretty good about what we feel. I'm not an expert on this, but I would say my team feels pretty confident on Copilot. We're using Copilot throughout the organization. There's different ways to subscribe to Copilot, though. And so you need to make sure that you're subscribing to a version of it that gives you confidence of the data. What we're telling our employees is don't put anything in that's confidential, no matter what it is, you know. No sales data, or if you're trying to use it to build a spreadsheet or something, you're really not sure, you know, about this, put in some fake numbers or something to sort of make it a little less likely to be a problem. So I would say we feel pretty confident of the big players. The problem is there's a lot of little players out there, so you got to be careful of what the little players are doing that you may not really, you know, be reading the fine print. You're going to see a big fallout. I think somebody mentioned that earlier today. I mean, you're going to see a big fallout. You know, there's this rush to having, you know, dozens and hundreds of companies that are providing services, and who are they, and who am I uploading my information to again? And is this? I mean, I would just sort of say, if you're uploading information, ask yourself, if I was uploading this right now to my competitor, would I do it? Because you don't really know where it's going. So you've got to have some care there. But on AI, I would be using it in all sorts of ways that are really not competitive. There's lots of ways to do it. I mean, we've built it into some of our platforms. We've got our credit, you know, the credit collections people. I wanted everyone using AI in the company. We've done a lot of work to get everyone familiar with the tools. And we're showcasing every quarter 3 great examples of how AI was used within ASI for our business. And we're doing that on a Teams call, so everyone in the company sees it and sort of gets excited about it. Well, we had some people in the credit collections group. We got a collections group of maybe 8 or 10 people that collect money. And they were like, we have no idea how we would ever use this. Okay, well, one of them just did a demo that was really exciting. And the prompt was something like, hung up a call with a 20-year ASI member. They owe us $3,000. They say they can't pay. We worked out a payment schedule, $100 a month, whatever the thing was. Write an email to them. Boom. And in a second, we had a 4-paragraph, incredibly thoughtful email to this ASI member for 20 years that honestly no one would have taken the time to write. But in 1 second, we were able to send that message to that client. So there's so many ways to use that are not really competitive ways to use it. But if you're not using it, you're behind. Everyone needs to be using AI and the tools that are out there.
Any other questions? Yes, right here.
I wanted to ask about USA-made products and what you're hearing from suppliers. Are some of them trending towards making more USA-made products, fully made in the USA, to support America?
Fully made is an important clarification. I'm hearing that they're working on it. The problem, I think, is that there's going to be a few things that are going to come together. 5 years ago, I would have been skeptical. My father was a tool and die maker in a factory. And my father took me to the factory and said, on a Saturday, they had an open house. It was super exciting. I was like 8 years old, seeing all this stuff happening, And my dad took me out and was like, I don't want you to work in a factory. I brought you here not to be excited, because I was pretty excited, but I don't want you to work in a factory. I think that you're going to start seeing a lot of things come together that will make the ability to manufacture in the United States much more possible than people even think today. I think the robotics, the AI, the 3D printing technology, which is zooming ahead at a pretty fast pace, will all come together to make it much more viable than it would have been 5 years ago. 5 years ago, I would have been a big skeptic, and I think many suppliers would have been big skeptics. I can't get enough employees, there's environmental concerns, on and on and on and on and on. However, I think we're in a much different place. I think that robotic activity, I think the 3D printing, if you haven't checked out 3D printing, it was like a big hot thing for a while, and now it's not nearly as hot a thing. I just toured a factory that's using it a lot, not in our space, but I think that it's very applicable to our space. So there are suppliers talking about how do they bring things into North America and manufacture here. I think you're going to see a lot of movement, but it's not going to be in the next year or 2 years. It's going to be like a 5-year build, because I think, one, we've got to sort of figure out how we bring it back, how do we do it authoritatively, and we've got to do it without adding, it's not going to generate a lot of jobs, I don't think. So I think people that think it's going to generate a lot of jobs are probably not right, because I think that won't work. I think the price of labor here is going to be always too high. But if we can bring it back with some robotics, enough people oversight to make it worthwhile and work properly, and then some of these new technologies can really make it work out pretty well, I think. I'm much more bullish than I was 5 years ago. 5 years ago, I would have said, no way, no more USA. Now I'm in a different spot. And of course, tariffs are helpful in that regard. Depending on your viewpoint about tariffs, tariffs make products more expensive outside the United States. Therefore, they can be a higher price if they're made in the U.S. That's the way it works. If they hold, we don't really know what's going to happen today, tomorrow, whatever.
We're quite a bit behind, so maybe one more question, and then we will wrap up here. So back over here, Bob.
Hey, I love that question about made in the USA. Will you make a stronger commitment to prioritizing those made in the USA products, so I can actually scroll through stuff without seeing a bunch of ads of stuff that's not made in the USA?
Yeah, good question. Made in USA. So, and I'm not really sure. We were just talking earlier today. I want to make sure that you all get the full benefit of what we're doing on the product data side. But so I'll get to your question, but let me back up for just a second. We just have undertaken in the last 6 months the deepest dive we've ever taken at ASI on the product data and the supplier data and their reported data about what is made in USA versus what isn't, what's made in Canada, is it sustainable, and if it's sustainable, what is it, the different kinds of nomenclature like B Corp, all of that very important information that suppliers provide to us, and also ownership. So is it a minority-owned business, et cetera. So we've done a very deep dive in the last 6 months, and we've told suppliers, your data is not going to be tagged the way you have it tagged unless you show us proof or you make a representation that is a written representation that what you're saying is factual. Because there was a lot of, I'm going to call it confusion on the part of people about what some of these terms mean, right? Made in USA is a good example, right? And so, and I had a huge fight with a supplier on the phone about this. So it's very raw right now because they were very unhappy with what we were saying. But the FTC has a definition of what made in USA is, and you need to have that be the case. We've added, it's not only just made in the USA, you can search for made in USA, there's a tag for that, assembled in the USA, which is different, and decorated in the USA. So we've added those additional tags. To make a long story short, I will follow up to make sure that we do have the ability in our product data for you to be able to search for Made in USA products and prioritize those products. I'll make sure that we're taking full advantage of that in our relationship with Facilis to make that easier for you to do.